Now to the latest trend that's sweeping the internet.
So-called NFT.
They're now selling for huge bucks.
$69 million.
Oh my God. So what's behind this latest craze?
That is the question to ask.
With crypto crashing, if you own a non-fungible token or NFT, you are so funged. The NFTs that do still have value just caught monkeypox.
Bored Ape Yacht Club, from $340,000 to $42,000. Mutant Ape Yacht Club, from $100,000 to $8,000. Nouns, from $233,900 to $53,700. A new study by Dapp Gamble has found that 95% of NFT collections held by an estimated 23 million people are worthless. This means 95% of people holding NFT collections are currently holding worthless investments. In January 2022, singer Justin Bieber purchased a Bored Ape NFT for a record $1.3 million, but it's now worth around $37,000, a drop of around 97%. An NFT of the first tweet from Twitter co-founder Jack Dorsey was sold in March 2021 for $2.9 million to Sina Estavi, the chief executive of Malaysia-based blockchain company Bridge Oracle. Early in 2022, Mr. Estavi put the NFT up for auction. He didn't receive any bids above $14,000, which he didn't accept. Anyone who bought a digital artwork over the past 2 years may well now be worrying about the state of their investment. This daunting reality should serve as a sobering check on the euphoria that has often surrounded the NFT space. Amid stories of digital art pieces selling for millions and overnight success stories, it is easy to overlook the fact that the market is fraught with pitfalls and potential losses. However, investors aren't the only ones suffering. NFT marketplace Recur, which is backed by billionaire Steve Cohen and known for its Hello Kitty NFT partnership, said it's winding down due to unforeseen challenges and shifts in the business landscape. Mark Cuban and Joe Lubin backed NFT social media platform NFTs, which partnered with Warner Bros. On Looney Tunes-themed NFTs before changing strategy, also said it's closing shop, citing investment opportunities that didn't pan out. Surviving platforms and projects aren't faring well either. Leading NFT marketplace Blur has seen its sales volume drop 96% between a late June 2022 peak and early August 2022.
How do you think this space could crumble if it ever did?
Well, it's definitely, in the macro, it won't crumble because I'm completely convinced that the blockchain is now here to stay. But again, internet stocks in 2000 all went to zero except a couple. By 99 and 2000, all these companies are public, but they're making no money, but they're worth billions, making no money. All of a sudden, kind of like how markets work, the market decided, wait a minute, this is bullshit, and the whole thing crumbles in March of 2000. That's gonna happen with this. Do I believe that VFriends or Bored Ape or Punks or the best stuff, Xcopy, Beeple, could go to 10 cents of the dollar that's now down 90%? The answer is yes.
So you think even the big projects are going to tank?
Yes, because when the entire market tanks, everything tanks.
To analyze the current state of the top NFT assets, Dapp Gamble researchers looked at the top 8,850 NFT collections according to CoinMarketCap. They found that 18% of these top collections had a floor price of zero, essentially being worthless. 41% of the top collections had been priced between $5 and $100, which may indicate a lack of perceived value attached to these assets. Moreover, less than 1% of the collections were worth more than $6,000. A stark shift from the million-dollar deals that dominated a $22 billion market in 2021. The study also showed that 79% of all NFT collections currently remain unsold, and the surplus of supply over demand has created a buyer's market that isn't doing anything to revive enthusiasm. Even after filtering out the lower value and less significant projects, most collections have little value today. It's clear that a significant portion of the NFT market is characterized by speculative and hopeful pricing strategies that are far removed from the actual trading history of these assets. Additionally, this apparent disconnect between listed prices and actual sales could suggest that many sellers are waiting for another massive surge in NFT interest akin to the boom witnessed in 2021, which may not ever occur again. Because when you look at the charts, everything is down. Please subscribe if you find this video informative, and please hit that notification bell so you will be notified when we drop another video. Public perception is another hurdle. Many people are skeptical, viewing NFTs as a speculative bubble or struggling to understand their value. Primarily, there was a traditional boom and bust. For all that NFTs proponents want to claim that the underlying economics behind NFTs and crypto were immune to that. At the same time, NFTs were constantly plagued with worries that the majority of interest was confected through so-called wash trading, where people buy from themselves to bump up prices. And increased regulatory interest, including from tax authorities, made investing in NFTs less attractive for lay traders. Controversies around cryptocurrencies, the underlying method of buying and selling NFTs, also harmed the reputation of these digital goods. The collapse of FTX hampered belief in cryptocurrencies, making people worry that some were using the potentially transformative change in how to run financial systems for their own gain, rather than the benefit of society.
In the history of finance, every time there's a new market, we do see fraud find its way there. And if the market is, sort of low and undercover, that provides an opportunity for that fraud to really metastasize. So for anybody who's interested in really taking the NFT market to the next level and legitimizing it, they're going to have to figure this problem out before it gets too bad.
And even their virtual application is limited in many ways. There's not much else you can do with an NFT than hold on to it till you find someone who deems it valuable enough to buy it, which is precisely where the ultimate problem lies. NFTs have no intrinsic value since demand and price are driven by speculative interest. A loss of interest will inevitably result in a price crash. Second reason is wash trading.
A new report from the blockchain firm Chainalysis finds two major types of fraud are already evident in the market. The first is called wash trading. You might be familiar with that from financial markets. That's when one owner trades between his own entities to make it look like there's a liquid market out there. Chainalysis found 262 wash trader groups active in NFT markets, generating profits so far just under $9 million. There hasn't been any enforcement action on any of that yet.
There's almost no avoiding wash trading in markets where prices are driven by interest. Wash trading happens when someone buys an asset and resells to themselves to create false activity in a bid to generate demand and artificially inflate market prices. It played a significant role in the NFT bubble of 2022, and it's still a major reason for the volatility the overall crypto market is infamous for. Per a CoinTecho study, NFT wash trading accounted for about 23% of the trading volume across the top 6 marketplaces combined in February 2023. And that's a much milder number than the 67.1% recorded the previous year. The act is more popular on NFT marketplaces that incentivize trading activity such as LooksRare and X2Y2. Bigger names like OpenSea and Blur recorded lesser wash trading numbers, most likely because they charge significant transaction fees. Wash trading might trigger a transaction or several, but of course, that kind of activity is not sustainable. The unsuspecting investors who fall victim to the scam soon discover the actual value of the token and prices adjust accordingly. What's ironic about the whole thing is how counterproductive wash trading is for the NFT market. Word gets around about the fraudulent dealings, and that discourages potential investors, which is bad news for a largely speculative market. Another reason why investors pulled out of the NFT market en masse is the utter lack of regulation in the space. In its current state, the crypto economy is a financial Wild West. No authority governs the activities in the space, so there isn't a system of amends for any losses or injustices one might face. All investments have a risk factor, but at least traditional investment is guided and governed by entities to ensure fair play for and by all parties. But there's no such arbitrator if you lose money to an NFT investment. And of course, that makes any investor think twice about buying into the market. And the problem isn't just that there's no regulation, it's that the NFT market is difficult to regulate. Copyright laws don't apply since many NFTs are variations of one image, and ownership is tricky to track and prove. The law does not yet recognize the blockchain as proof of ownership, plus most NFTs are stored off-chain anyway. Unsurprisingly, such an unregulated market is bound to be prone to scams, and despite it being a nascent industry, the NFT space has had many of those, as well as several costly hacks, which are good enough to warn off many potential investors looking for long-term prospects.